I bought my first condo, we as a couple to be precise, 1.5 years ago. We had questions like where to start, what to do first, how long do things take, and what additional fees to expect, and so on. And there are some things that are really good to know in advance to make buying your first home as smooth as possible. So I thought I'd summarize it for you in this quick guide. So let's start. When we started our home buying journey, we found out there's one really important thing to do first before buying a house with a mortgage, which if you're not prepared will delay the whole thing, which is to build credit. When you apply for a mortgage, the lender will pull your credit report and look at your credit score and history. The better your credit score and history, the more likely they'll give you a better, lower mortgage interest rate. In general, the minimum score to get a good mortgage rate is 680. If you have a lower credit score, there might be lenders who just don't want to lend you any money or charge a higher interest rate, which means a higher monthly mortgage payment for you. If you're signing up for a mortgage as a couple like we did, then both credit scores will be taken into consideration. So our credit scores were already good to begin with at a time in the 700s. But considering that mortgage rates were and are still so high, we wanted to maximize our chances to get an even better deal. So we made some effort to get our credit scores even higher to around 800. And it takes some time to increase your credit scores, and if you want more tips on how you can maximize your credit score, then watch this video later. Next, we looked into another very important step, which is to save for a down payment. If you got this step covered, then just skip to the next step. But if not, then start this one as soon as possible because it takes time to save money. And there's a minimum down payment required depending on the price of the home that you want to buy. For a home that costs less than $500,000, you need a minimum of 5%. We were newcomers to Canada and kind of rebooting our lives here, so we didn't want to stretch our finances too much and wanted to have some money left to invest. So we decided to stay below $500,000. So that meant a down payment of 5% or about $25,000. We luckily already had some savings, but we didn't have it in the right places yet. And this is what I mean. If you're buying a home in Canada for the first time, also known as first-time home buyers, there are a number of benefits that you can enjoy, and here are the two main ones. The HBP, or the Home Buyers Plan. Under this plan, if you have money saved up in an RSP, a registered retirement savings plan, you can withdraw up to $60,000 now from it to use towards your home purchase. You'll have to repay the amount back into your RSP in installments. At that time, this was the only option available to us, so that's what we did. But shortly after we bought our home, the government launched what's called the FHSA, or First Home Savings Account. After saving money in this account, you can withdraw up to $40,000 to use for your home purchase. The great thing with the FHSA is that you don't need to pay the money back. So now you can use the HBP in conjunction with the RSP or the FHSA, or you can even combine both. The benefit with either is that the amounts of money you originally contributed and then withdraw to buy your home are tax deductible, meaning they reduce your taxable income and so you pay less taxes, approximately 25 to 30%, which is a lot. So unless you have a ton load of money, make sure you make use of these benefits for first-time home buyers. And start early because there are contribution limits, maximum amounts you can contribute to these savings accounts each year. So we spent about a year fattening our down payment savings to about $40,000. And you might be wondering why this amount is much more than the $25,000 I initially mentioned. It's really important to save up more cash because, for one, the home you'll end up buying might be more expensive than you initially thought. And also, two, because apart from the down payment, there's also what's called closing costs, which can amount to $5,000 to $10,000. Watch this video later if you want to find out more about how much cash upfront you need to prepare besides the down payment. So while getting all of our ducks in a row, we started browsing condos already, and that part was really fun, imagining ourselves soon living in our own place. But before we got too carried away, we wanted to know for sure how much home we could really afford. So we went online and used some of these mortgage affordability calculators to get a rough idea of how much home we could afford. So let's use CIBC's calculator for example. Let's say your total household income is $120,000. You plan a down payment of $30,000, and let's say the monthly condo fees are $400. The approximate amount you can get approved for is $464,000 with a monthly mortgage payment of $2,534. That gave us a rough idea of what we could be approved for, but the other really important aspect to consider is, can we actually afford this in real life? So we also did some calculations of our own to estimate affordability. Regardless of the mortgage amount we would be approved for, we wanted to know how it would actually affect our lives. So I would really recommend to you to take a step back before buying your home and really consider how much of a financial burden buying a home will be to you. There's not just the monthly mortgage payments, but there's also maintenance fees, taxes, insurance, and so on. You want to make sure that you're not stretching your finances too much and still have a buffer, ideally some money left over each month to invest. So we took some time to really think through what we were willing to spend and arrived at a number. We didn't want to spend more than $2,800 each month on the mortgage payment. Getting our credit scores up and the down payment together took about 1 to 1.5 years. And then we started really looking at homes online. We just wanted to get a concrete idea of what $500,000 could or could not buy in Toronto. And then it got really exciting. We started viewing some units, and each time there would be a real estate agent attached to the condo who would show us the unit. So technically, if we wanted to buy the unit, we could just go ahead with that default real estate agent, which luckily we didn't do. In general, it's always better to get your own realtor who represents you and acts in your best interest. So that's what we did. The next step is to find a realtor. After going through the whole home buying experience, I found out how important it is to have a really good realtor. And lucky for us, my husband's colleague recommended us a really great one. This would be my number one tip. Try get a realtor recommended by a friend or colleague who has worked with them before. A really good realtor will try to really get to know your needs, what you're looking for, and yes, almost handhold you through the whole process. They will guide you and tell you what you need to do next at each turn, so there's never any confusion. So we started working with this realtor, and we got this detailed questionnaire asking us how many bedrooms we wanted, what size of an apartment we wanted, floor, neighborhood, what amenities were important to us, etc. And this leads me to step number 5, which is actually an in-between step. List your criteria for your dream home. We kind of started this before we found our realtor, but completed it when we started working with him. This is a really important step, especially if you're buying a home as a couple who might have slightly different preferences. We wrote down in quite detail what was important to each of us. Things like price, for example. We didn't want to go over $500K, even if we were approved for more. We wanted the condo to be bright with large windows, ideally a 1-bedroom, but we'd also be okay with a studio. Also near public transportation because we don't have a car, and so on. Then we discussed our criteria together, so we were on the same page. Really important. I think this list really helped us to stay focused. Once you start your search, you'll see so many different units, some really nice ones but out of your budget, or sometimes within your budget but not meeting your criteria at all. And it can be so easy to get sidetracked, so it helps to look at the list again to remind yourself what mattered to you in the first place. The next step should go almost parallel with finding a realtor, which is to get pre-approved for a mortgage. The point of a pre-approval is to find out whether you qualify for a mortgage, and if you do, what amount you qualify for. The online calculators kind of give you an estimate, but the only way to really know what you qualify for is to get pre-approved. And this is really important to know because whether you get $1 million, $500,000, or just a $250,000 mortgage will affect the kind of home that you can buy, especially if you have a limited amount of money for your down payment, like in our case. And this will also help the realtor select suitable candidates for you. Now, how do you get pre-approved? There are 2 ways. You can go to a bank or a financial institution directly, perhaps the one you already bank with, for example, the Scotia banks, TDs, and so on. But they may not necessarily offer you the best deal, so make sure you shop around first. And the best way to do that is through a mortgage broker. And that's what we did. After taking in all our details and documents like employment history, pay stubs, information about assets and investments, she searched for the best deal for us. If you want to know more about my experience of working with a mortgage broker, about some of the mortgage eligibility criteria, watch this video later. So we got pre-approved for a mortgage, and the amount was just what we needed, about $500,000. So now that we knew what our budget was and what kind of condo we wanted, it went really quick. And surprisingly, there weren't so many options that met our criteria. I think it was within a week or so that we found our condo. The next thing we did was to put an offer on the condo. And this is all done on paper, by the way. Don't worry, your realtor, if he's a good one, will guide you through all of it. They'll have the offer papers drafted, and all you need to do is put your signature, mostly digitally, through DocuSign nowadays. We also prepared a deposit of 5% of the approximate purchase price. So quick detour here. Deposit and down payment are two different things. The down payment is the amount you put towards your home to secure the mortgage, usually at the time of closing. Whereas the deposit is an amount of money you as the buyer pay to provide security to the seller. That way the seller knows that you're serious and won't just walk away. If your offer is accepted, you need to actually pay the deposit immediately, usually within that day, to the realtor of the seller, and the money will be held in a trust account until closing. And then we also got into a bit of a bidding war, and this can feel a bit emotional, especially if you really set your eyes on a place. But finally, we won the bid. Our offer was accepted by the seller, and we were so happy and excited. We really couldn't wait to move in. And then we got ready for closing day. Usually it takes about 30 days from when the offer is accepted to closing day. And again, we relied on our realtor's guidance and also network. To close the whole thing, we needed a lawyer, and he recommended us 3 lawyers he had worked with previously. We contacted all 3 and chose to work with the one who was most responsive. Very important. So before we finalized everything, there was one important step. We needed to make sure that our conditions were met. Another quick detour. When we first submitted our offer to the seller's agent, we put 2 conditions in our offer. The first one was the status certificate condition. We wanted to know about the condo's management financial situation, so we'd not suddenly be hit with a large repair bill, for example, and would only proceed if we found this to be in order. And we also had what's called a financing condition, which said that we'd only proceed if our mortgage got approved. If you want to hear in more detail about these conditions, you can watch this video here. The lawyer basically draws up all the contracts and ensures the proper title transfer of the property from the old owner to the new one, you. The lawyer also handles the funds. So if you're wondering who you're giving the down payment to, it will be to the lawyer. Since our down payment was about $32,000, we needed to transfer the difference between the down payment and the deposit, about $7,000, to the lawyer. We also had to transfer the lawyer fees and some sales tax, which amounted to about $8,000. And remember, all of this, the down payment and closing costs, came out of the money we saved in our RSPs. No taxes on that money. And after the lawyer completed all the documentations, we finally got our keys. And after about a week, we moved in. So looking back now, it wasn't all that complicated. If you know what steps to follow, and if you have a helpful and reliable realtor, it will be smooth sailing. If you're serious about buying your first home and you still need to prepare your finances, I would start about 1 to 2 years in advance. And if you want to know in more detail about my whole condo buying process, check out the videos in this playlist here.